Hello, everyone, and welcome to another edition of the AI Cash Grain Podcast. I'm Satish Nandapurkar, Director of Data-Driven Strategies at Quantum Hedging, and today is August 23rd. Before I get started, I just wanted to make sure everyone understood. We do sometimes recommend futures and options on this podcast. Quick disclaimer, there is risk of loss in trading futures and options. It can be substantial. And each investor and or trader must consider whether this is a suitable investment. Now, with that, let me go to this week. First, I'm going to go to Cy Monley, and he's going to talk about the action this week. Corn was fairly flat, closed down 2 cents at 3.91. Beans had a nice little rebound, possibly just a bounce, going up 16 cents and closing at 9.73. Cy's going to talk about what the fundamental traders are looking at and what data they are keying on. Then we're going to go to Kevin McNew, who's going to talk about our models in corn and our models in beans. Both corn and beans are sideways, possibly to the end of the month for another couple of weeks, but then corn, the model's gotten kind of bearish as we go further out. So as you can see on the corn side, as we go to the end of September and into the end of October, corn's a good amount lower, whereas beans is a little bit lower, but still mostly sideways. And next week is an end of the month, so we'll definitely be having recommendations in next week's podcast. But for this week's podcast, and for this week, our recommendation is just to continue to hold. We're 60% sold in corn, hold that position. We're 55% sold in beans, hold that position. Next week will be a big week when it comes to recommendations, though. With that, let me turn it over to Cy. Cy, let's talk about corn and beans from your perspective.
Yeah, Satish, we continue to have a market for both corn and beans that these are some big yields, and the fear is that the yields are getting bigger. And so what's the function of the market? The market's to drift lower, finding demand. Now, if you look at corn, we are the cheapest in the world. That hasn't happened in a while. So this is kind of getting interesting. Our models were sideways last couple of weeks, but I think the models are now turning a little bit bearish. So I could see that for the next 2, 3, 4 weeks. Function of the corn market is to go find that demand and bring the global buyer to us and chew through this big crop. We're going to hit harvest. Historically, you get a big push lower in harvest. So I can see that happening both corn and beans. Now, the one interesting piece is over the weekend, Pro Farmer actually had yields a little lower, closer to 181. Well, if that's the case, 375, 380 corn might be low enough. So I think we could see a market where you push a little lower, trade sideways, get some demand, get some pops. Basis might need to do the work. The function of the futures market might be to sit around here for a little bit as basis collapse. Now, beans are a little different story. You've got a situation where we're also cheap in soybean oil, and the forward demand for biofuels is looking pretty interesting. So while beans by themselves are bearish off the Pro Farmer, who gave us a monster yield, the products, soybean oil might stay firm, which could cause beans to hold on here post-harvest, right? So today, I think we're leaking lower, but we are looking for lows probably in the next 6 weeks. Kevin, are our models really show anything different?
Hey, thanks, Cy. It's another week with really little optimism to kind of look through. From a model standpoint, the models this week turned a little more bearish. They were looking, especially as I'll show you here in a minute, beans, when we were at 950, we're looking for a little bit of a bounce, and we got that bounce this week. And that's really about all we're kind of catching in the models right now is, anytime the market kind of sells off, the models kind of say, well, there's a potential for a short run bounce, but beyond that, there's not a lot of optimism to really change the price dynamics we see as we round out the last of the growing season. So, for corn right now, range of expectations $3.40 to $4. Just is seeming harder and harder to kind of eclipse back above that $4 mark. Really, it's more psychological at this point. The bottom line is farmers are not feeling good about prices where they're at. Hopefully, you've been following along with some of the recommendations to be pretty actively sold, because where we're at now is not probably going to change between now and call it the end of harvest. Price wise, we did see our model back down a little bit in its version of upside here. Firmly now we're sitting kind of in that 368 mark for September, October. And so, our take is that we'll probably see test of new lows as we move forward here for corn. For beans, maybe we get a test of fresh lows. It's not a huge possibility, but again, the story continues to be not a lot of optimism to eclipse above that $10 mark. I mean, it is in the range of expectations. Right now, our range is 880 to 1025 to round out the balance of the growing season. But overall, the fundamentals and all the features that go into our model cannot find anything that really suggests much more than just kind of flat to lower as we round out the balance of September and October. So that's kind of where we're at. End of month projections, are firmly kind of back in that 950, 960 mark where we traded. Maybe this week we'll see a little bit of a pop based on what our models are saying. But overall, just not a lot of optimism here. Satish, what are you seeing on your side?
Thanks, Kevin. Let's take a look at recommendations for this week again. Our recommendations for both corn and beans are to hold. We have an end of month. For the next podcast, we're going to be doing that for the end of the month of August. So we will definitely be having recommendations. And the methodology, as I've talked about a lot of times, is for us to beat a benchmark. The benchmark is a predetermined strategy of selling a certain percentage of bushels at the end of every month from January through October. So when we are bearish, we are going to be oversold versus the index. When we are bullish, we're going to be undersold versus the index. That's basically going to be the strategy. It's a way of controlling risk as well, because again, we're going to judge ourselves based on how well we did against the benchmark. So let's just take a look at where we are with respect to corn on that benchmark. We're a little bit oversold. We're 60% sold. The benchmark is 55% sold. We last sold at the end of July, along with the benchmark. We have a slightly bearish stance because we're 5% oversold. We're tracking to a 10-cent outperformance approximately versus the benchmark at the end of the program. Right now, we're a good 12 and a half cents over, but by the time we average in the rest of the bushels, we'll be about 10 cents better if we don't change the recommendation at all, given the fact that we've dropped so much. With respect to beans, we are matching the benchmark. We're 55% sold. The benchmark is 55% sold. Again, we last sold at the end of July. We maintain this neutral stance. We're tracking to about a 5-cent outperformance. Now, we're going to get to the end of August. Both models are bearish. Corn's a little bit more bearish than beans. If I had to guess right now, we'll probably keep a slight oversold in corn and keep a neutral in beans. But, we have another week of data to bring in, and we'll see what the models look like on Friday, and we'll update these recommendations. But again, next weekend, I can guarantee you we are going to be making some sale recommendations. So a quick summary and recap of the week. Corn was fairly flat for the week. Soybeans had a nice bounce for the week. Cy came on and talked a bit about corn, really just how big the yields could potentially be. And until we find the demand that makes up those yields, we're probably seeing lower prices in corn. With respect to soybeans, biofuels might be the savior for soybeans down the line. When you look at the models that Kevin showed, again, those big yields are starting to play into the models where we're seeing even lower corn prices as we get into the end of September and October. For beans, though, we're seeing a little bit lower, but there's a little bit more of a balance. Beans has already dropped a ton, as you know, over the last 6 months. And from a recommendation standpoint, for this week, we are holding, that's the recommendation, holding our position of slightly oversold in corn, neutral in beans. And that's really because next week is an end of the month. When we do the podcast next week, it'll be an end of the month. And so we will definitely be having recommendations. So the models are kind of just waiting, the simulations are, until the end of the month. And then we'll figure out how we want to be positioned relative to the benchmark index. So that wraps up this week. Thanks again for being a subscriber. Thanks again for listening. Very much appreciated having you on board with us for AI Cash Grain. We will see you next week. It'll be a big week. Thank you.